Very good morning, good afternoon. Welcome to the Financial Source Daily Sentiment session. Hope everybody's doing well. Yes, good morning, Adnan. Good to see you. Alan, hey. Ryan. I know, Ruby. I know exactly. It is absolutely mad. My poor cat doesn't know what to do with itself. She's just lying in a dark room, completely stretched out, miserable. Morning, Rajiv. Good morning, Mark. Good to see you guys. Yeah. Yeah, for those who are non-UK based, we are struggling over here in the UK. We're just not set up for the heat. No, Ruby, I'm exactly the same. Yeah, we're experiencing some high heat here, Adnan. Obviously not up at that level. Good morning, Najam. The garage is sounding a very attractive place right now for us here in the UK. My son was thinking of moving his computer down to the garage. Oh, yeah. All right then, folks. Let's get stuck into the session. So there's one narrative that's emerging that we need to be aware of, and you can see that in equity markets last night. It's tech stocks. Remember, the Nasdaq is very, very sensitive to interest rate changes. The slightly firmer dot plot and just concerns over tech stock valuations continues to weigh on sentiment. And we had this break of this level here last night in the Nasdaq, and you can see the Nasdaq was down 3.22%, S&P 500 down 1.38%, Dow sort of trying to find a bit of a base, but still lower on the session. DAX, Euro stocks, China 50, FTSE 100, volatility off the higher levels, but we just got that tech stock concern. And all of that is adding to more dollar strength. Remember yesterday we said like, okay, I'm not looking to fade this dollar strength because it can continue. So today's sentiment exactly the same. We're looking for that continued dollar strength so it continues to be buy on the dips. So a couple of opportunities that jump out to me. Number one, we had the Australian inflation data out last night. Where is it? Let's have a look. You can see here early morning Wednesday trimmed mean, that's the sort of more influential inflation reading coming up above the prior, a 3.4%, 3.6%. That's well away from the 2% target. Headline inflation within the range, but still, pretty lofty. The trim mean going up is what will be the focus. And you've got the CPI month on month coming up towards the high of expectations. So it just means the RBA are in that more sort of hawkish stance. So Aussie US dollar selling makes sense. So the first sort of trade to be looking for is opportunities to sell the Aussie US dollar where appropriate. Now, it's quite stretched, the Aussie US dollar. So kind of looking for further extension to the downside, something like this, a sort of wedge pattern, go with the break and continue to break lower. Otherwise, what would be a good area would be just shorting from that region here. Right, just on the sort of false break of that level there, 5 point stop, try up to three times at the 0.6920. That'll be fine. So either back up to there and looking for more downside, or if we get a continuation and a flow through, breakout, continuation, mini sort of flag pattern, just a very short, maybe 20-point target, something like that on a break there, maybe down to the 0.6880. Now, that dollar strength, I was looking at that yesterday with the pound dollar. This is just a little learning point. If you look at the pound dollar, I tried to execute this last night, which was, we were looking yesterday, we said, look for flag patterns in the pound dollar. We see we got this channel right? And when this channel broke out yesterday afternoon and the tech stocks were selling off, it was just very obvious that there was more pound dollar downside with the dollar strength. So the entry was here at that 132.05, right? 5 point stop. And you see a 20.50% off, leave rest at break even. So that was just an example. Sometimes when you can you can see that and you maybe think, well, I didn't take the trade, but I can take the retracement maybe on an overnight level back to that channel. A bit like here, do you know what I mean? Didn't, if you didn't get that flag pattern breakout, and that's a good example. This is how you chase those kind of impulsive moves. Pull back, breakout, you go for that, and you can go for like 3-to-1 risk reward, something like that. And if you just keep trading those flag patterns on macro stories, it's a one-stop shop for you, right? And it keeps the risk reward good. That's poor English, but you know what I mean. It keeps that ratio in your favor. So for today, like now this sort of channel breakout is in a range. So that's no longer valid there, because if we go back up there, we might go back into this channel. Instead, I'll just be keeping this area here. So shorting the pound dollar continues to make sense. And from a retracement back up to that level there. So 1.3305 is suitable for shorting the pound on that dollar strength narrative. Similarly with the euro dollar, looking for exactly the same kind of dynamic. We're looking for a retracement trade. Again, looking for flag patterns. If we don't get a flag pattern, then we get a pullback. That's a bit high now. So the pullback area now is that 1.4172. And this is just saying, yeah, I'm going to continue chasing this dollar strength. And I feel confident to do that today because we're waiting for some important data tomorrow. The major sort of data release for the dollar is this print coming up tomorrow for the inflation data, PC, the Fed's preferred measure of inflation. So that's your next major sort of volatile driver for the dollar based on the macro narrative. So today should be residual dollar strength. And if there is a retracement in the dollar, you'd expect it to find rally sellers. So shorting euro dollar, pound dollar, Aussie US dollar, buying dollar CAD, all that makes sense. Euro pound, this is heading towards my entry now, 8,600. I've bought in one position and I'm now looking at buying in another position at the 8,600. I like that. You can see the yield spread is still gapping. The yield spread's gapping higher and price is moving lower. So you can see that divergence. Price lower, right? Yield spread up. So over time, I'm expecting this euro pound to retest that 8,700. So for me, this is a good macro opportunity. Now, in terms of the stop placement, this is crucial when we're trading these macro stories. So, okay, where do we say we're wrong, right? So if you look at the average true range, you see the average true range is 26 points. So let's say I want to give it 3 ATR on a stop. So a 3 ATR stop will be 75 points. So that would mean that I know, I'll be sure I'm definitely wrong if I hit the 8,525. So the risk reward is just over 1-to-1, but the probability for me is high because I can see the yield spreads pushing up. So I'm expecting dip buys to come in here, and I'll use a 3 ATR stop. So that's going to be my kind of perspective on the euro pound. So euro pound, hang on, let's just get this. That's the one I want. Let's get rid of that. So euro pound, I've got one position in, I'm going to buy a second position in, and my stop's going to be running at 3 ATR. So if my stop gets ticked out there, like I know I'm wrong. This is all being driven by UK politics. There's relief that Andy Burnham is expected to be the PM, and there's more stability than the political risk premium was in prior to Andy Burnham moving into a leadership contest. Keir Starmer, the UK Prime Minister, has announced a schedule for his withdrawal from the Premiership, and Andy Burnham is widely expected to take over, and that sort of relief is just washing through markets. But ECB tried to turn more hawkish yesterday. Bank of England will not be wanting to hike interest rates at all, and the yield spread is saying the same thing, right? The yield spread up, price down. That's a good buying opportunity. You see the way the euro pound tracks the yield spread, and every now and then you get these sort of divergences, which are really sort of clear. So you can see here, okay, price moving lower, look, yield spread moving higher, and you see eventually you get the dip buyers come in, right? So what's happening? Yield spread moving up, price moving lower. Yes, there's an opportunity to buy euro pound. Apart from that, we've got US-Iran headlines. It continues to be bumpy. Markets are sort of looking through it. Otherwise, dollar strength is the main narrative for the day. Anything else to say for today? No, and then just looking, really, the main thing is just to look for buying the dollar on the dips. Right. So dollar Swiss franc upside. Dollar yen is still suitable for shorting with expectations of a intervention. So with the exception of the dollar yen, the rest of it pairs you're looking to buy the dips in the dollar. All right, folks, that's all for now. Try and stay cool if you can in the UK. Otherwise, I'll see you later for the future session. Take care, folks. Oh, and just don't forget the AI narrative that's building, and that's been in the background for so many months now. It's now coming front and center. High tech valuations, and keep your eye later if you want to see about risk. If the VIX starts moving higher and the Nasdaq starts moving lower, that'll tell you that AI tech story is right front and center. It's kind of back in the narrative now, and it shows you that markets are not focusing on the geopolitical side anymore. They're now focusing back on tech valuations, the AI trade, Fed policy. So we've had a shift. Markets' attention is back onto what's going on from a macro perspective. Yep, take care, guys. Bye for now.